Gold, 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 gold. What is gold telling me in US dollars, that is, because you have gold in any type of currencies, but against a US dollar, that's what we're all looking at. And it's making a strong move. I remember back here in these candles, a lot of people, it's time to break out. But I had my monthly defined breakout at 1350. And I didn't want to break. I didn't want to play anything. If I didn't have a close above that, for me, it was a no-go right here. 1 month, you could have went in here. I'm going in. But by the end of the month, came back down. And those monthly closes, guys, it's those wicks, man, it's noise. And I don't know, I've been asked on the YouTube, one of my viewers, and he said, why are you looking at closes? The close I've seen it as intraday noise or intra candle noise from those smaller time frames. It's price action from those small time frames, but I don't know essentially what's the real reason why they work so well, why they've avoided me. I've observed that they've avoided me false whipsaws. My reasoning, maybe it was back in the 80s or early 90s. You'd get those in the local newspaper. You had the closes that were shown, and so you'd base your decision on the next day if you'd buy your sell orders, buy orders, maybe based on the closes from the stocks we're looking at. You didn't have all that intra minute, hourly, 4-hour candle. You had the daily. Maybe sometimes you just had the weekly closes, and those daily closes, or that daily price action. By the end of the week, you get that weekly close. So then you'd have the whole weekend to decide, okay, am I going to buy the stock? Am I going to do, what's my analysis? And all that weekly action is encompassed in monthly close. So all that weekly action, even if it's up, there's some weekly closes here above in that wick. There's some weekly wicks in that wick. But by the end of the time, that month encompasses all those closes, all that price action from smaller time frames. And you get a very noise-reduced signals. So when you have breakouts or breakdowns on monthly candle chart, you have essentially removed all the noise from the smaller time frames. You have a bigger weight. Remember, you have the higher trend is on the monthly chart. When it decides to hit, it's gonna push you no matter. See here, you have uptrends and downtrends within that higher prevailing trend. So for me, monthly trend, 12-month moving average, monthly closes, green closes, defined resistance. Where if it can't close higher, that's resistance. And red candle closes, defined support. That means the market decided I'm not going any lower. So that's pretty much how I'm reasoning why I'm using monthly candle closes as my premier choice to reduce whipsaws and get the cleanest signals. So 1350, would have avoided me all these whipsaws right here. What are we doing? Higher lows, higher lows, higher lows, coiling up on the monthly, man. That's going to be a beast of a move when that breaks above 1350. We're now we closed above the 12-month moving average in December, and now January we're continuing upwards. Is it inclining? Not yet, but when the price action closes above 1350, or we'll see, maybe this month or next month, that 12-month moving average is going to be angling upwards. We'll be above trending upwards, and that is bullish for gold. Where's my greedy target? I had tons of charts on this. Whoa. And this is my measured move, 1650, back to this previous resistance. Ooh, we might hit some congestion here at 1550. 1550 might have some congestion here. Previous support and alternate resistance. Or else that target's going to bring me all the way close here to this top pattern. Wow, gold, very close, closing in on 1350, guys. Okay, let's head on to the weekly. 30-week moving average going upwards. We see it right away here. Check it out. Paste arrow. Oh. Overperforming the SPX. Inclining 30-week moving average. Price action above 30-week moving average. We're above. See, it was going side for a while. So the Ichimoku cloud is kind of thin. We're above Ichimoku cloud defined resistance. Cool. Move that here. We're just missing the volume, guys. So this is probably building up. So it's going to probably go up slowly. I don't see any entries right here. You just have to wait. Let it go. Inflate slowly under the radar. Maybe consolidate here a few weeks and then wait for that monthly candle close, man. Gold for me, that's going to be when the big move you have to wait for here. Because if it hits at 1350, pierces through, closes below, it could decide to go down here and then go back up. You don't want to get trapped. You don't know how long it's going to go. It could go down even lower. Hit that 30-week moving average. Come and challenge. Come close with these previous lows on the monthly. Not quite overcome them to the downside, but get close. Your sell stops, you'll be suffering. You might get triggered out if you put your sell stop too close. So you're so close to 1350. Don't do that fear of missing out. Just wait for a good candle close above it, above 1350. You're so close to that. And then after that, you'll have a low risk environment, entry environment, and high risk reward. Instead of entering here to just grab a few more pips, a few more price action, but you're risking it could stall at the 1350 and go back down, go back up again. You don't want to get caught there. Yeah, contracting volume, small volume, guys, right here. There's nothing yet to see on the weekly. Could give a little fast check on the daily. Oh, look at that. All this. Remove all drawing tools pad. Whew. On the daily, we have a bullish cross above 200-day moving average, above the 50. You see the 50, I put it in. Everybody looks at it. But there's noise often below it. Keeps going up. There's no bearish divergence. Higher highs, and we're still trying to make higher highs on the indicator. Higher lows. Let me check if we have on the weekly what type. If we have divergence, to kind of force that down. Ooh. Getting tight. So let's see if it goes up here. There's some bearish divergence forming from these highs right here. But yeah, right here, there's some bearish divergence. So if it starts going down, it might need to reset a little bit before going back up. And let me check on the monthly. So we see how you're crossing over. Monthly stock, don't use it as for bearish divergence or bullish divergence. Use it as an indicator of the strength. Look, you're in a power zone right here. Overbought for a while, but you're staging to it. And when it starts going down negative territory, then you're in the downtrend, oversold for a while. Brief moment here. Stage 2 going up. Hasn't decided yet, but it's trying to decide right now what it's going to do. Downwards move, oversold, and now it's crossing over. And let's see if it could remain in the power zone here and ride an uptrend like this. So it's setting up pretty nice. Put your alerts on 1350. Wait for a monthly candle close, and after that, you are set to go, guys. All right. That's it, gold. See ya.